Welcome back to Etienne's Place. Happy to be with you once again as we share some more tidbits to get you on a stable financial path. Today, we'll be looking at business structures or types of businesses. A number of small entrepreneurs, persons interested in starting their own businesses, would have questions from time to time as to what is the advisable way to go? What kind of company should I register? What is the best business type for tax advantages, etc., etc., etc.? As a matter of fact, some clients are not even sure of what are the various types of business structures. And so today I thought that we would spend some time looking at the different types of business structures, starting from the very simple, basic, and we move through as we look at the different types and their complexities, their tax implications, and what are the requirements that we need to fulfill in order to go, that particular route. Let's begin with sole proprietorship, and that's the simplest form that you can have. Sole proprietor, a person decide I want to start a business, a home cleaning business. I just want to go around and be a handyman, and therefore I just offer my services here and there to do whatever. As a sole proprietor, I'm just going ahead, working, providing labor, collecting my pay, and I'm good to go. For such a person, then quite often there's no formal registration. The person works, earns, and come tax time, basically they will report that earnings on their tax returns, and go forward. That's a basic or the most basic form or format of a business where you have a sole proprietorship. Now, moving from the sole proprietorship, you have various possibilities when one decides to have a registered business. And for business registration, it is important to note that your registration process, or if I may say, all the compliance that you must adhere to, compliances that you need to adhere to, will fall under three umbrella: the federal umbrella, the state umbrella, and the local umbrella. So once you decide to have a registered business, of course, you're going to move at the federal level. You need to apply and receive an EIN number, employer identification number. That is the federal number by which the business will be recognized for all correspondence between that business and the federal government for all tax purposes and tax considerations. That's at the federal level. You receive your EIN, your employer identification number. At the state level, you need to have your company or your business registered with the state. So business registration is a state activity, it's a state undertaking. Okay, so you register a company at the state level. Of course, the kind of business that you wish to register will vary, among one of maybe three, four different types. We'll come to that shortly, but I just want to point out you have the federal level, federal requirement for the EIN. You then go to the state, which is where you do your state corporation registration, so to speak. Then we come to the local level. The local, where locally you will either reside in the city limits, within the city limits, or you may be in the county. And why I emphasize that is because where you have city and council separation, then of course where you go to have your local registrations and compliances done would be either at the city office or the local office, local county office, depending on where you are. And at that office, that's where you will get your business license. Okay, that is a local license, local compliance. So you have the federal compliance, which is your EIN number, federal number, your state registration, which is where you register your company officially to say, okay, I have a company registered in the state of Georgia or Florida or Tennessee, etc. Then at the local level, you go to your city office or your county office to get your business license. In addition to that, depending on what type of business you're in, what kind of services you're offering, there may be additional requirements as far as certifications are concerned. So, for example, I know if you're to be maybe a beautician or an, um, of course, a plumber, electrician, etc., then you have to indicate that you have some level of competence and that is demonstrated by the certifications that you have. So at the time of applying for your business license, it will be confirmed by the office that you are so certified, so licensed, and quite often you need to have some sort of insurance coverage. Okay, so that's basically what you need to do. The three prong: federal, state, local. You need to go through all three channels and then you have your company properly registered in full compliance. Let us now look at the types of business entities that you could consider. You may decide, and this is one of the most prevalent business type that small business owners would gravitate to, the limited liability company, right? People talk about LLC. That's your limited liability company. And therefore you can register as a limited liability company. Now, you may register as a single member limited liability company. Okay? Just you. You go, you say, I want to register this company. I want to be the single member. And so you're a single member limited liability company. Or you may decide, okay, I want to register this company, still a limited liability company, but I am going to be joining with one other or more persons, and therefore it becomes a multi-member limited liability company. Once you have two or more members in that limited liability company, then for tax purposes, it is designated a partnership. A partnership, okay? Partnership between the two persons or among the three or more persons. So you will have a partnership, still a limited liability company. However, for tax purposes, it is treated as a partnership. Good. Or you may decide, no, I do not want to be a single member LLC. I do not want to be classified as a partnership. I may choose to go the corporation route, where you say, I want to register my company, my business as a corporation. Now, as a corporation, you can be the single owner, or you can have multiple owners for a corporation. So now, at the LLC level, you have members. You all are members. At the corporation level, of course, you are all now classified as shareholders. The question as to what kind of business entity one should gravitate to is usually driven by tax considerations. What will be my tax position given the kind of business that I decide to go with, business type? And so let's spend some time here. Now, listen very carefully. If you register a limited liability company as a single member, you alone, then when you're applying for your, remember now, this registration is at the state level. That's where you register companies. But then, as we said before, you would now need to get your employment identification number at the federal level. When you're applying for this number, one question is how many members are in your company. If you indicate single, I alone, one member, then here goes. The IRS will give you a particular designation, a particular title, and that is referred to as disregarded entity. Disregarded entity. Very, very important. You have registered a limited liability company as a single member. In your mind, you're thinking, since this company is referred to as a limited liability company, then I, David, have limited liability because the company that I created is referred to as a limited liability company. The IRS is saying, since it is a single member limited liability company, I do not recognize a difference between you, the owner of that company, and the company itself. And that is where the term disregarded entity comes from. It means, therefore, although in your mind you may think that there is a separation for tax purposes, for legal purposes, that there's a separation between yourself and that limited liability company, as a single member limited liability company, you're classified as a disregarded entity, in so much so that whenever you go to prepare your taxes, your tax returns, you are required to report all the LLC activities on your personal tax returns, on your individual tax returns, on what is known as a Schedule C. So it means, therefore, that all the income earned by this company, all the expenses incurred by this company's LLC will be reported on what is referred to as a Schedule C, which is basically the form that captures all income and expenses of your LLC, and that will be reported on your personal tax return. So if you realize, therefore, that all of that, although generated under the LLC, is really reported on your personal tax returns, and therefore no separation. You are that perceived separation is disregarded. Basically, that's what it's saying. Disregarded. Okay? And so that is where a single member LLC falls. Let us go to the multi-member LLC. Remember I said once you have two or more members of this LLC, then it is ascribed the label of a partnership. A partnership. Now, as a partnership, it means therefore that, okay, I'm not the only one. There are two or more members of this LLC. Now, instead of having to report all your business activities on your personal tax returns as a single member LLC, you now have the opportunity to prepare a partnership tax returns, which is a separate tax returns from your personal individual tax returns. And this now is where we're talking about my tax return as an individual, the business's tax returns or the partnership's tax returns, which is separate from mine. One more step. The partnership is referred to as a pass-through entity. Pass-through entity. The partnership as a business unit is not a taxable entity, meaning that it is not required to pay taxes on the income or the profits that it generates. Whatever profit this partnership makes or whatever loss it incurs will pass through from the partnership onto your personal tax returns. So for example, partnership earns $1,000 in the year. Partnership business expenses amounts to $80. So partnership makes $20 profit. That $20 profit of the partnership is not taxed because the partnership as a business entity is not a taxable entity. That $20 profit passes through from the business tax returns onto your personal. And so this is where the $20 will be taxed on your personal tax returns using your personal tax rate and be subjected to all your personal exemptions and credits, etc., etc., etc. So right away, you realize that, oh, this may be a very good idea and a very good way to go. That's a partnership. Okay. Let us jump to the I'm just get rid of this little tab on my thing. Let us jump to the corporation. And when we mentioned that this is another possibility that you may decide, okay, I want to set up a corporation. Now, I like to say to my clients, and of course, I'll just remind you, my client base is mainly small businesses, medium-sized businesses, etc., and of course, individuals. I like to say to my clients, once you mention C Corp or corporations, in my mind, I'm thinking of the Walmarts and the Lowe's and the Bank of America and all those large entities, C Corp corporations. And so I usually advise my clients that if you're going to register your business as a corporation, be mindful of several things. Several things. And the key thing here is the tax consideration or the tax implication of a corporation. And here it goes. Simply put, a corporation suffers from what is referred to as double taxation. Double taxation. So using the same example as before, if this was a corporation and it made $1,000 of income, had $800 of business expenses, income $1,000, expenses $800. So it ended up making a profit at the end of the year of $200. Because a corporation suffers or is double taxed, here's what happened. First of all, the corporation will be required to pay taxes on that $200 profit. Okay, because corporations are taxed, unlike the partnership. So the corporation will have to pay taxes on that $200. Let us say that if the tax on the $200 was $50. And so the corporation make $200 profit, pays $50 taxes, and so it has $150 after tax. That $150 now belongs to you, the owner of the corporation. And that $150 is what you're getting as income to you. You need to report that $150 on your personal tax returns and then pay tax, your personal tax on that $150. So what just happened? The $200 was taxed. I would have said, for argument's sake, it was $50. So the business paid $50 tax out of that $200 profit. After tax, it sends to you the $150 after tax money. You get the $150, you put it on your personal tax returns, and what happened? You now pay additional taxes using your own personal tax rates, based on what tax bracket you're in. So here we go, double taxation. The company pays tax, you end up paying tax. I say to my clients, well, I would not say in all cases, but in 95.5% of the time, we want to avoid C Corp. We refer to as C Corp, corporation, C Corp, okay? Because that is one of the significant consideration that one should bear in mind when making a decision as to what company type. So you want to sort of scare away somewhat from the corporation. Now we come to what is referred to as a S corporation. S corporation. And there's a little mystery. There's always been a little mystery surrounding S corps. And I'm going to give you this very simple and basic version of what S Corp is all about. I like to look at it this way. At the extreme minimum is my sole proprietor. At the extreme maximum, way up top there, is my C corporation, C corps, those large corporations that suffer from double taxation. So this is what I'm talking about. Sole proprietors, large corporations. Okay, good. Now, I don't want to suffer from the double taxation of corporations. I want to benefit from the pass-through effect of a partnership. However, if I had registered a LLC as a single member LLC, remember now, I would have been treated as a disregarded entity and I would have been forced to report all my business activities on my personal. But I don't want that to happen. So other than doing that, I can go corporation, but I don't want that to happen neither, because it's double taxed. I want to find a middle ground that gives me what I would refer to as a sweet spot, a balance. And here comes Mr. S Corporation, because what happened is like an S Corporation, similar to the partnership, is a pass-through entity. It does the same thing as a partnership. It earns $100. It pays $80 of expenses. The $20 profit, it passes it through to you, the owner of the business. So you get the benefit of pass-through without the pain and burden of double taxation, although you're a single member LLC. So remember, I'll just quickly repeat this. If you are a multi-member LLC, meaning you and others join up to form this LLC, then you're okay, because you're going to have a partnership tax returns. It's going to be a pass-through entity, no double taxation. However, if you register a company as a single member LLC, in order to avoid being classified as a disregarded entity down there, in order to avoid being doubly taxed up there, we're going to find some point somewhere here. That point is the S corporation, because it allows you to have a separate business tax returns referred to as a S corp tax returns. That S corp tax returns, whatever profit it generates, passes through to you without being taxed. So the S corp, like the partnership, is a pass-through entity, and the S corp, unlike the C corp, is not double taxed. And just as though we were talking about profits, let's look at the losses. The corporation, if it makes a profit, it is double taxed. Taxed there, taxed here. What if that corporation made a loss? If that corporation made a loss, that corporation has to keep the loss for until future years. When it makes profits, then it can use that loss, that unused loss. For example, if it had $100 sales and $120 of expenses, then it made $20 loss. There's nothing it can do with that loss. It has to just keep the loss and say, okay, next year, when I generate more revenue and I'm making more taxable income next year, at least I'll be allowed to write off some of that potential tax liability with this loss that I have this year. That's what you can do. Let's move back to the pass-through entity, whether it be the partnership or the S corp. That's not the case. If the S corp or the partnership suffer a loss in this year, you know the good thing about it? The partnership or the S corporation do not have to keep the loss and hope that it will be able to use it to offset against some future profit. No. Just as our profits are passed through from partnership and S corp to me, so that I'm not double taxed or anything, it's the same way if the partnership or the S corp had a loss. It also passes that loss from the company's tax return to my tax returns. And when that loss comes over onto my tax return, it gives me a tax write-off. See where I'm going with this? It gives me a tax write-off. So it means, therefore, I'm not asked to delay taking the benefit of any tax write-off as a result of a loss. If it was a corporation, there's nothing I could do. I would have to let it sit there. And in future years, when I generate income, generate profits, and I could offset some of that profit, some of that tax bill, potential tax bill, with the loss I incurred. But with the partnership and with this S corp, we're saying no. It's a pass-through entity. It passes profits through to you without first taxing it. It passes losses through to you so that you, in the same year, can benefit by getting some amount of tax write-off by virtue of the fact that you incurred a loss. That loss is a loss that was transferred from the partnership or from the S corp across to your personal tax returns. Good. So I know it's quite a bit of mouthful. I will agree, but I thought I would just try to give you the skeleton of those business structures. Of course, as I keep on saying over and over, that most of these things that we discuss, there will be some other complexities and considerations and restrictions, etc., to them. Okay, and so if you're really contemplating getting into any of these business structures, you'd want to consult with an accountant, with a tax professional, etc., to kind of go through all the gory details. However, what I'm trying to give you here, as usual, is a general understanding, a general framework as to how this thing works. And so by so doing, once you start to think, once you begin thinking of business structure, and the question come up, man, what kind of business should I open? Then I want to right away in your head say C corp, corporation, double taxation. No. Single member LLC, and just keeping it there, being treated or being classified as a disregarded entity. No. I want to be at a place where I am not doubly taxed, so it's not C corp. I want to be at a place where the profit that my business generates is not first taxed, and then I, the owner, is taxed a second time. No. So that's not C corporation. I want to be a partnership or S corp, which are pass-through entities. So if you and another are going to open a business, you're automatically going to be treated as a partnership. You're good to go. If, however, you're going to open register your own company, Uno, because of course a lot of us want to just control everything. We don't want to get into any partnership, etc. So the way to control everything, be the single owner of your business and still benefit from all those little goodies, I call them, then that's the way to go. You set up your single member LLC, but you do not stop there. You move to the next point, which is to, as it were, apply to the Internal Revenue Service to be given the S corp classification. It's called a subchapter. That's the subchapter classification. All right, which is the balancing. I would call it the best of both worlds. Okay, you're better off than a sole proprietor and a single member LLC. You're better off than a C corporation. You're sitting right here where you can pull on all the various benefits that comes with that type of business structure. Okay, good. And so that's it for today for business structures, different type of business entity that you may be contemplating. And I hope that you're following us here at Etienne's Place, and that you're making use of this the information as it flows, and be Christian like. Others may not be watching these videos, but as you gather and as you garner this sort of information, pass it on to others. You never can tell. You have your associates, your friends, your family members who may be contemplating doing something, taking some steps, trying to make a decision on certain matters. And so a little of these tidbits will help them to be guided in the right direction. So thank you once again for joining me at Etienne's Place. And I see my subscribers are really coming on, and I'm happy because I really want you to have this information. I want you to be empowered, man. I want you to be empowered because without saying too much, there's a sector of our society that are very well informed, and so they are way up the curve. And somehow, us small business persons, etc., tend to languish down here and trying to feel our way around, etc. But it does not have to be like that. So thank you for joining me. Remember to subscribe to Etienne's Place. And remember, this is where we find the solutions. This is where we say, okay, challenges, yes, come. Come, challenges, come. Because at Etienne's Place, we have the remedy, so to speak. All right. Thank you again. God bless, and I'll see you in the coming